Warren Buffett's path to becoming a millionaire by age 30 and eventually a billionaire reveals powerful lessons in investing, business, and seizing opportunities. A key early advantage was Buffett's family background. His father, Howard Buffett, was a successful businessman, stockbroker, and politician. Howard instilled values of honesty, humility, and frugality in Warren from a young age, shaping his philosophy toward money and life. Welcome to MoneyWise Investor, your trusted source for financial information. In this video, we'll be exploring Warren's journey to making his first $1 million, step by step. This is the story of how one of the greatest fortunes was built from humble beginnings. Warren Buffett's story started in 1930 in Omaha, Nebraska, where he spent his childhood years. He was born to his father, Howard, a stockbroker and congressman, and his mother, Leila. Growing up with a father in finance, Buffett gained early exposure to conversations about the business and stock markets. This front-row seat to his father's work sparked Warren's interest in the financial world. As Buffett himself noted, "I was lucky. I had the right heroes. Having the right mentors and models is critical to future success." While we can't choose our families, we can make the most of our situations. For Warren Buffett, having a father immersed in business and finance provided a springboard into the investing universe from virtually birth. Warren displayed a knack for entrepreneurship and making money early in life. At just 6 years old, while other children played games, Buffett roamed his neighborhood selling packs of gum, earning him the nickname the Gumball Machine. This childhood gum selling foreshadowed Buffett's later business prowess. Following that, he also purchased Coca-Cola bottles for 25 cents and sold them for 50 cents each, doubling his money. So from as early as 6 years old, Warren had the business bug. He was wheelin' and dealin' any chance he got, following his instincts to turn a profit. These childhood ventures were his first steps towards future riches. A major key to Warren's success was having the bravery and conviction to hold investments long-term, even when prices dipped. This legendary patience was displayed when Warren was just 11 years old. In 1942, he purchased 3 shares of City Service preferred stock for $38 per share. When the price subsequently dropped to $27, Warren held on rather than panic sell at a loss. He understood that markets fluctuate and conviction pays off long-term. Imagine having that composure as a preteen. While Warren's shares eventually got sold by his anxious father at a loss, this early lesson in resilience stuck with him and shaped his investing approach. Another formative experience came at age 12. When Warren worked as a newspaper delivery boy, he borrowed $100 from his aunt and used it to ramp up his paper route and hire other kids to work for him. This first business netted Warren $175 a month, teaching him the power of saving and reinvesting profits. Now, as the years passed, Warren's entrepreneurial drive and business acumen only intensified. When Warren was just 14 years old, he used $1,200 in savings to purchase a 40-acre farmland plot just outside of town. Can you imagine buying real estate at only 14 years old? But Warren saw this as an opportunity to generate passive income, not just a place to play. The farm already had tenant farmers cultivating the land who would pay rental fees to Warren, and Warren also viewed the farmland as an inflation hedge, a tangible asset whose value would rise over time. What foresight for someone so young! This clever venture taught Warren invaluable lessons about land and real estate as an appreciating asset class that could provide ongoing income streams. By exploring diverse business ventures, Warren mitigated risk while cementing his identity as an astute young businessman with a growing array of talents. You could clearly see Warren's special drive and determination at a remarkably young age. While his peers were playing sports or learning instruments, Warren was positioning himself for financial greatness, one small but strategic investment at a time. Warren was clearly a promising student, even getting accepted to Harvard University, but he ultimately opted to attend Columbia Business School to study under the legendary professor Benjamin Graham. This turned out to be one of the most critical decisions in Warren's early career. Graham had an enormous influence on shaping Warren's value investing philosophy. Graham stressed fundamentals over speculation, patience in long holding periods, and targeting statistically undervalued stocks, trading below their intrinsic value. These principles deeply resonated with Warren and provided a rock-solid foundation for his future success. Essentially, Warren got to learn from one of the greatest masters of value investing while still in college. It was like getting to train with Michael Jordan during your high school basketball career. After completing his Ivy League education, Buffett returned home to Omaha and began working for Graham's investment firm for a few years, gaining invaluable experience analyzing companies. But eventually, Warren returned to his hometown to start his own investment firm. He partnered up with his close friend and lawyer, Charlie Munger, who helped provide seed capital. This takes us to one of the most pivotal investments of Warren's early career in the early 1950s. During this era, he purchased a solid stake in the Sinclair Broadcast Group, which was trading substantially below its book value. In other words, Sinclair's assets were worth far more than its market price, making it poised for growth in Warren's eyes. Warren invested well over $100,000 into Sinclair stock and eventually netted a massive gain of over $1 million on the investment. This enormous return was strong proof and reinforcement of Warren's savvy value investing abilities and skill for identifying quality, underpriced stocks. It gave Warren the confidence to continue pursuing his craft. Riding the momentum from the Sinclair success, the eager 25-year-old Warren Buffett decided to start his own investment firm called Buffett, Falk & Company in Omaha alongside with his close business associate, Charles Falk. The ambitious company dealt in small stocks, bonds, utilities, real estate, you name it. With his comprehensive business education and hands-on experience, Warren delivered fantastic returns by sticking to the patient value investing principles Graham had ingrained. For example, one early investment was in Geico Insurance, a company Warren understood was undervalued at the time. He saw the potential for growth and put a huge stake in Geico, eventually netting over $100 million in gains. Warren's hot streak continued, with several other strategic investments in the 1950s. One was purchasing stock in Dempster Mill Manufacturing, a windmill equipment maker that was struggling financially. But after researching their underlying assets and operations, Warren identified the company as underpriced, with strong turnaround potential. So he purchased a majority stake in Dempster and even gained a seat on the board of directors. Then Warren set to work streamlining operations, cutting costs, and reviving the languishing brand. Within a few years, he helped nurse Dempster back to profitability and sold his stake for nearly triple his investment. It was textbook value investing, spotting a good underperforming company and using smarts to unlock its untapped potential. Warren put his business education to work, demonstrating his gift for seeing value others initially missed. Warren would go on to repeat this formula with Hathaway Manufacturing, another distressed textile company producing cotton shirts. He again bought up the majority of shares before implementing changes to revive the dying business. Turning around struggling companies not only netted Warren Buffett hefty returns, it gave him critical management experience and cemented his identity as a business turnaround master. Now, on top of his stock market investments, Warren was also dabbling in the entertainment industry during these years. He purchased jukeboxes and leased them out to establishments across Nebraska. He also opened a pinball machine business, eventually expanding to over 35 machines across town. And Warren even opened a record shop catering to jazz lovers like himself. Now, this all culminated in 1956, when 26-year-old Warren Buffett formed the Buffett Partnership Limited in his hometown of Omaha. He seeded the company using $100 of his own savings, along with capital from his family and friends, but soon the asset management firm was off and running. Leveraging the lessons learned from Graham and his own rapidly gained experience, the Buffett Partnership posted phenomenal returns, averaging 30% annually. Warren hand-selected underpriced stocks like Disney, Coca-Cola, and Gillette, blending Graham's teachings with his own instincts. His humble Midwest upbringing provided Warren with practical wisdom about consumer behavior while mingling value investing metrics. This balanced approach proved widely successful. As word of mouth spread about Warren Buffett and his unorthodox yet effective strategy, wealthy businessmen and institutions came flocking to invest with his firm. Within just 4 years, the Buffett Partnership's assets exploded in value from $105,100 to an astounding portfolio worth $7,178,500. Warren's reputation continued to grow, as did his fortune. He used part of the capital to purchase majority ownership in a small New England textile company called Berkshire Hathaway, a major acquisition that would become the centerpiece of his empire. With Berkshire as his investing vehicle, Warren meticulously acquired stakes in railroads, media companies, Coca-Cola, and other giants he understood immediately. His patience and business knowledge allowed him to see value before others caught on. When beaten down stocks like American Express were shunned by the market in the 1960s, Warren pounced at the opportunity to go big, and his billion-dollar payoff decades later proved his elite judgment yet again. Just like that, before his 30th birthday, Warren Buffett had amassed well over $1 million through sheer perseverance, hustle, and adhering to timeless investing wisdom. This was only the beginning of the legend, but what an inspirational start. By following Warren's blueprint, anyone can steadily build wealth over decades through discipline, smart diversification, and spotting diamonds in the rough that others initially miss. Warren dealt with small sums at first, but had laser-focused determination to turn each opportunity into profits, which he then reinvested for greater and greater returns. It was never an overnight success for Warren Buffett. Rather, it was consistency, patience, and the willingness to outwork others while sticking to proven business and investing fundamentals. These qualities allowed Warren to generate his first $1 million by the remarkable age of 26. This was just the beginning, but contained all the seeds of the legendary success still to come. So be empowered by Warren's story and start implementing the lessons covered today. Map out your own path to prosperity and financial freedom. Consistency and patience wins the race. I hope you found this video entertaining and educational. Don't forget to smash that like button and subscribe if you haven't already. Also share the video with your friends and families, people who you'd want to see as great investors tomorrow. Thanks for watching, and until next time, stay money wise.